Hello and a very warm welcome to Business Today. I am Siddharth Zarabi and with me Mr. Prashant Kumar, the MD and CEO of Yes Bank. Welcome to the show, Mr. Kumar.
You.
Once again, a quarter and we are having this conversation with you. I want to begin with the big news for Yes Bank investors, which is the formation of the asset reconstruction company. Clearly, it's going to help in cleaning up the balance sheet. Um, what is the plan in this regard, and by when can we expect a zero NPA sort of situation for your bank?
We finalized our partner on 15th of July after almost a year-long process. And they have given us a base bid of 11,183 crores, which is 135% of our net carrying value of the NPA in our balance. So basically, this also demonstrates in terms of that our provisions coverage is much more than the recoverability. And the further recoveries out of those stress assets would add to our profit. After finalization of the partner, we have already launched the Swiss challenge as per the regulatory guidelines. And Saturday was the last date to get the expression of interest. The two large players have participated in this process, and now they will be doing a due diligence and submitting their final financial bid by the end of the August. So I think once we are able to do this, we are expecting like in October, we would be able to consummate this transaction and the bank would remain with the NPA of 1.5 to 2%. And then we can take a call about those NPAs. So basically, the NPAs would come down significantly. And then going forward, we can also make it like a zero NPA.
Right, Mr. Kumar. I also want to talk about your performance. Yet another steady quarter, 50% increase year-on-year growth in earnings and a 60% or thereabouts decline annually in provisions. What has led to the lower provisioning, and what is the stress level that you think is still not fully accounted for?
No, we have already recognized the entire stress portfolio. This lower provisioning because of two reasons. One is the reduction in the slippage. So last year, this quarter, we had a slippage of 2,000, whereas this quarter, the slippage was 1,000 crore. Similarly, if we see the recoveries, so recoveries in our stress pool also offset any credit cost required. So the credit cost current year is 62% down as compared to the last year. So I think this is how we are also guiding the market that over a period of time, recoveries from our stress asset would neutralize the credit cost.
Okay.
We are targeting to reach at a credit cost of say 25 basis point kind.
Right. What about the capital raising plans, Mr. Kumar? We've been hearing, some commentary about that. Where do the plans stand, and how big could they be? Can you share some details on that?
So since now we are out of the reconstruction scheme, I think this is the time where the bank has already moved on the growth path. And not only for growing, but to be at the comparative level with our peers, we need to have a CET ratio of around at least 14%. So we are thinking that in the current financial year, if we can raise capital to the extent of a $1 billion kind of thing, which would not only create a buffer, but would also take care of our growth requirements for next 2 to 3 years. So in the current financial year, we would be trying to raise this. And today, if you see the market conditions and others, they are very, very volatile. So I think depending on how the things would stabilize in the market and depending on the offer which we get and the pricing, we would like to do at the earliest, but definitely during the current time.
Right. Mr. Kumar, let's talk about the loan book, which has shown a growth of around 14% year on year. Corporate loans declined around 10%. However, the retail and the medium and small segment has grown 40%. How do you expect credit growth to pan out over the rest of the fiscal? And maybe a comment about corporate loan growth, the dip that you have seen, a one-off, or does it indicate some sort of trend?
So overall loan growth, we are targeting at 15%, where the contribution would be coming mostly from the retail and MSME. Large corporate is something which we are also targeting a loan growth of 10% for the full year. And the decline which we have seen on the corporate is not a one-off, typically of the two reasons. One, like our own strategy, that wherever we are having the large exposures or the risky exposures, we are bringing down those exposures. Similarly, if you see the large good corporates, they are also prepaying to the banks. They are actually deleveraging their balance sheet, making it better. So I think we got this impact because of these two reasons. But overall, this is good for the bank in terms of we have been able to reduce our exposures in some of the stress accounts. But going forward for the current year, definitely reaching a loan growth of 15% is something which we would be definitely able to achieve. But going forward also, we would like to grow more than the market. And last 2 years also, we are seeing a continuous improvement in our market share, both on deposit side as well as on the loan side.
Mr. Kumar, operating profit has declined 20%, primarily on account of lower treasury income. Interest rates are on a rise. We really don't know where they are going to stabilize. Do you think treasury income is continue to be hit because of what is going to happen on bond yields? Or do you think that we have sort of hit a peak for the moment?
So treasury income, basically, if you see, I think we don't expect the kind of treasury income which happened in the first quarter last year to happen in the current financial year. But there would not be any negative impact also. Because if you see our MTM losses of the treasury income are just 37. So I think we are not going to see any negative impact, but we are also not expecting a positive contribution coming from the treasury on our overall income.
Mr. Kumar, NIMs have been stable at 2.4%. What is the outlook for the rest of the year?
So we would be exiting the FY23 around 2.923%. And the average NIM for the current financial year would be 2.7%. This would happen because of two reasons. One, increase in CASA deposit ratio. It would reduce our funding cost and also a better yield on our loan portfolio.
Mr. Kumar, let me move on to the expected scheduled meeting of the Monetary Policy Committee. What's your own expectation? What is the kind of hike that you are personally looking towards? And overall, what do we see happening to interest rates in the near term?
One thing is very, very clear that interest rate would be increased. And this is a phenomena which we are seeing globally as well as in India, because the inflation still continues to be very high. The only difference which we are expecting that this time, the increase may not be basis point thing. So we are expecting an increase between 25 to 30%.
Mr. Kumar, do you think one of the sort of positives in this environment of uncertainty, especially over the last 6 months, has been crude oil? Has that the softening of prices in the recent few days and weeks come as a positive surprise to you? And do you expect that will contribute to softer inflation in the quarters ahead?
No, exactly. I think the softening of the crude prices is giving us a confidence that regulator may not increase the interest rate to the extent which they have done in the last year. And that's why we are thinking it would be only 25 to 35. But crude is an important country.
Right. Mr. Kumar, one point that I want to take in follow-up as we wind down this conversation. Overall, how is the recovery looking to you at this point of time during the year? We have had a fairly good monsoon, although there have been excessive rainfall in certain parts of the country. We are also seeing consumer continuing to take. What's your overall assessment?
No, I think our assessment is that India would be definitely doing much better than the rest of the world. Like what we're rightly saying, monsoons have been good. We will be seeing the good agricultural production. And I think some of the initiatives which the government has taken last year in terms of increasing the manufacturing sector, I think that would also help. Similarly, the resilience of the overall economy, whether coming from the corporates or the individuals. So I think currently we are not seeing any impact which we have seen globally. So we are quite confident that resilience of our industry, the economy, and overall would not be having any negative impact. The only thing would be how fast we can control on the inflation.
Right. Mr. Kumar, one final question, and this is to do with Dish TV. Is there any word on the appointment of a new managing director? Where does that overall matter for that company stand?
I think that is something which again the board of the company will take a call whom to appoint the MD and CEO. Okay? As a shareholder, our role was more in terms of having a better governance in the company so that the valuation of the company. Now, I think after like the voting in the AGM, now we would be looking for like the proposed from the shareholders can be put up to the shareholder in the form of a EG. But all attempts are basically to strengthen the.
Right. Right, Mr. Kumar, thank you very much for your time with us today and discussing the financials as well as the outlook for the economy in the near term. Thank you very much for your time with us.
Thank you so much.
If you like the video, do like, comment, share and subscribe.